Good afternoon, and thank you for joining. My name is Bryan Wallace. I'm a managing director at Bridgepoint Investment Banking, where I lead our coverage of the display, signage, graphics, and print industry. For those of you unfamiliar with Bridgepoint, we are the premier lower middle market investment bank catering to family and founder-owned clients in the display, signage, graphics, and print space, where we offer sell-side M&A advisory and capital raising services to accomplish a variety of objectives. As we head into the 2022 Print United Conference, we wanted to take a step back and look at the broader display, signage, graphics, and print space, which we call DSGP. I don't think it will be a surprise to many of you listening that we are seeing a dynamic and changing market environment that is impacting performance for DSGP operators throughout the country. Overall, we note that most DSGP businesses, like most operating in other sectors, are seeing unprecedented macro level headwinds that are impacting performance for both small and large players. Just as many of these DSGP businesses started to come out of COVID and see operations normalize, operators are now facing really strong supply chain pressures and a rising interest rate environment, which has changed the game. Inflation has impacted pricing, and we are seeing that many operators are trying, in many cases successfully, to pass this rising cost environment on to customers. These headwinds are impacting public equity performance. The chart in the top right shows how the Bridgepoint DSGP index has traded compared to the broader market. And similarly, the market has been impacted and is showing weakness in light of some of these macro headwinds. Despite these headwinds, we believe that the DSGP industry as a whole should perform well through 2023. There are a number of unique tailwinds that are driving this performance and offsetting some of the macro concern that we just discussed. The first and biggest driver of growth through 2023 should be the resurgence of in-person events, namely conferences, trade shows, and other in-person events where folks are anxious to get back in front of their customers on a person-to-person basis. Most industry participants believe the trade show space is at 30 to 40% of kind of a normalized operating level, and this should encourage trade show attendees to reskin their booths, their graphics, their signage, which will drive incremental growth. We are also seeing continued penetration of digital printing, particularly across lesser known mediums, namely textile, which should continue to drive growth through in-person events, retail, apparel, and home decor. We see a continued focus on color management and small batch printing, which will drive performance for 2023. Many large brands are realizing the benefits that digital printing and a holistic digital printing service can provide from a brand and color management standpoint, which is resulting in further penetration amongst those larger printers and a really strong customer base for printers across the country. And finally, as we mentioned, coming out of COVID, we're starting to see many demand drivers come back and look strong through Q4 of 2022 and well into 2023. And we'll note that many folks are starting to realize and recognize the benefit that technology, when implemented correctly into their printing system, can add to their overall product efficiency and cost base. The tables on page 3 walk through various substrates and their availability and pricing projection in the current market. As we discussed previously, most operators are seeing that prices are continuing to increase. Most have successfully passed these price increases on to their customers. Even as supply chain concerns continue and are expected to continue through 2023. In particular, from a substrate standpoint, paper, both coated and uncoated, along with vinyl and plastics, are showing particular pressure, and most operators believe that they will continue to be difficult to come by as we push into Q4 and into early 2023. As the supply chain normalizes, operators do expect that availability and pricing for most consumables should normalize as well. We will continue to monitor the ink and coating market, as availability could be a concern as we push into 2023, should facilities in China or other key locations continue to see impact due to COVID or other shutdown concerns. From a deal standpoint, it's pretty clear that companies that have the ability to manage their supplier risk and inventory should be able to take share and command a higher valuation in the marketplace. This will be a hot button item for buyers of any DSGP business, and it's imperative that founders and operators understand that the supply chain is an area of concern and will be an area of significant diligence as you engage in a potential transaction. Page 4 walks through similar themes and really, highlights some critical talking points that have come out of the Print United supply chain survey that was published early in Q3. And effectively, at its core, most in the space expect the supply chain condition to worsen through 2023, with approximately half of respondents noting that supply chain has impacted revenue negatively, and it's an area of focus and continued concern for those who responded here. Most believe that supply chain pressures will continue into 2023, but that we should continue to see the supply chain issues normalize as we push forward. The wild card here is China and the Chinese response to ongoing COVID concerns. We are hearing that facilities continue to be impacted by large-scale shutdowns, and that will eventually trickle down and impact U.S. and European operators. So we do see and have continued to see strong management teams seek out alternatives for their supply chain with a focus on Vietnam, Thailand, Korea, Turkey, and Israel. Page 5 walks through some broader M&A and financing market data points that we think are important. The top left shows that in Q2 of 2022, deal volume and deal value fell considerably as we started to see early signs of recessionary pressures and rising interest rates, which impact financing, thereby impacting private equity transaction volume. Valuations on the top right have started to show some weakness, and deals are taking longer to get done. Rising interest rates, without a doubt, have disrupted the financing market. We have seen, particularly with private equity sponsor-led deals, that banks have stepped back, both in terms of leverage, increased pricing, but are much more prudent in new credit that they're issuing. And we have seen that private credit shops have stepped kind of into the gap and are offering unique unitranche and structured capital solutions that can benefit, sponsor buyers. There remains a tremendous amount of dry powder available. People want to get deals done. But we are seeing buyers act more selectively with their transactions, and they're engaging on fewer maybe kind of deals and are focusing on more certain situations. We are seeing that good deals continue to get done, and deals that have issues are much harder to get across the finish line in this environment. Page 6 shows the performance of the Bridgepoint DSGP index compared to the Russell 2000 index and the S&P 500. As you can see here, the DSGP index largely tracks that of the broader market, perhaps with a little less volatility. We will note that over the course of the last 12 months, the DSGP index has traded down 12.4%. Compared to 11.9% for the S&P 500, so largely in line with the broader market. As we think about 2022 and 2023 market expectations, we thought it was important to get the insight from several of the private equity groups that have recently invested in the broader DSGP space. The first is the team at Quad C, who completed a transaction with Catapult in May of 2022. Catapult is a very interesting niche label printer that Quad C believes is well positioned to grow through the recession and into 2023. Snow Peak Capital completed the acquisition of Sandy Alexander in April of 2022. Sandy Alexander is a print house that leverages technology to provide a variety of solutions to their customer base. And then finally, American Pacific Group, who acquired Fellers in December of 2021. Fellers is the largest distributor of automotive vehicle wraps and vinyl signage materials in the U.S. The team at APG has a thesis in this space and believes that Fellers' stable cash flow and strong management team will allow it to continue to take share and grow through potential recession in 2023. What do all these deals have in common, and what are the themes that drive investor interest? That is, the three groups here, Quad C, Snow Peak, and American Pacific, all saw tremendous upside in a niche and growing market. And they felt like their acquisition in those relative markets positioned them to take share and generate strong growth for the next 5 to 7 year period, which was nice runway for them as new investors. Page 8 has some additional private equity transactions. We see continued interest from private equity and family office investors, particularly for assets that have a niche and growing service capability, or those that leverage technology to help drive growth and customer satisfaction. We think that private equity and family office interest in this space will continue into 2023 and will be a viable vertical for private equity investment. Page 9 highlights a number of additional strategic transactions. So these are M&A transactions where the buyer had a previous investment or operated in the space. Strategic acquirers will continue to drive M&A volume in 2022 and 2023. We do not expect interest to wane much. As recessionary pressures mount and financing becomes a real concern, we also expect that many of these larger strategics will utilize their strong balance sheet to get deals done that previously they might not have been able to be successful with due to private equity interest. So we look for this to continue in 2023, particularly as large strategics look to add new and complementary product and service offerings and expand their geographic presence throughout the U.S. Page 10 tries to boil down some of the traits that make up a successful DSGP transaction. What do these deals have in common? What makes a company attractive to this buyer universe? And how should operators think about continuing to grow their organization so they can potentially position their business for future exit or sale? The top left boxes are the most critical piece of the page. And effectively, what we see as the common traits across successful DSGP deals are as follows. Number one, the business operates with a growing, stable, and diverse set of end markets. Number two, the business operates with a significant customer base, with limited customer concentration. Number 3, the business operates with a strong set of suppliers, very little supplier concentration, and strategies in place to diversify the supply chain should we see additional supply chain pressures. Number 4, management team that understands the business and has a strategy in place to drive growth and further penetration of their market. Financial sophistication with the CFO is critical component of that piece. And, at the end of the day, buyers want a blue chip management team that they can back and partner with to drive growth. And that comes with kind of the final box there, communication amongst the management team, transparency, and a general alignment of the strategy that's going to drive the business forward are some of the things that a private equity and a strategic buyer can look at and get excited about. Finally, page 11, we're excited to be attending Print United this year in Las Vegas. We are available and at the show to answer questions, learn more about you and your business, and what we can do to be helpful in a dynamic and changing marketplace. Bridgepoint is the only lower middle market investment bank with a team dedicated to the DSGP space. We know the market, we know the players, we know the buyers, we know the business model, and it's a space that we really like and spend a lot of time in and have committed very real resources to. We love to talk about the DSGP space, so please do not hesitate to reach out to any member of the team to talk through where you're at in your business and how we can be of help. Thank you all for the time today. We look forward to seeing you at Print United, and do not hesitate to reach out to any member of the Bridgepoint team with any questions you have on this report or the DSGP space in general. Thank you, everybody, for the time. Have a nice evening.